All right, let's get right into it. Companies are pouring, I mean literally pouring, trillions of dollars into artificial intelligence. Nvidia's chips sold out for the next 2 years. AI stocks are all anyone can talk about. But what is really going on here? In this explainer, we are going to break down the absolutely massive AI investment boom that is reshaping, well, pretty much everything.
And we're going to hit the one question that is on everybody's mind. Is this the biggest investment opportunity of our lifetime, or are we just watching the next dot-com bubble inflate in real time? You know, the answer? It's a little more complicated than you might think. Let's dig into the numbers. Okay, first, just try to wrap your head around the scale of this. Global spending on AI is on track to hit $2.53 trillion by 2026. That's trillion with a T. This isn't just another tech trend, folks. This is one of the biggest, fastest capital shifts in economic history. We're talking dot-com boom level, maybe even bigger.
So where's all this money coming from? Well, a staggering amount of it is coming from just 4 companies. We're talking Microsoft, Alphabet, Amazon, and Meta. Just those 4 are set to spend over $500 billion on AI infrastructure this year alone. To put that in perspective, that's more than the entire GDP of a country like Sweden. Insane.
And if you zoom in even closer, it gets crazier. Microsoft has an $80 billion budget set aside just for its AI data centers. But here's the part that really gets me. Every single one of these major players is saying they're still constrained. They're literally telling Wall Street we cannot spend our money fast enough to keep up with the demand.
So where is all this cash actually going? It's not just disappearing into fancy software or chatbots. No, this is a massive physical build-out. Think of it like a worldwide construction project, building the actual physical infrastructure that's going to power the next wave of technology.
And this slide really breaks it down for us. Just look at this projection for 2026. More than half of that $2.5 trillion, about $1.37 trillion, is going straight into hardware, data centers, and the energy systems to run them. This is not a software race, people. This is an infrastructure arms race to build what everyone is now calling AI factories.
So who's cashing in on this gold rush? Well, the obvious winners are the chipmakers, like Nvidia, right? They're selling the picks and shovels. Then you've got the hyperscalers, Microsoft, Amazon, who are spending a ton, but also making a ton by renting out their cloud. But you know who you can't forget? The energy sector. It's the quiet giant in all of this. Because without a mind-boggling increase in power, none of this happens. It is the ultimate bottleneck.
Okay, but a spending spree this big just begs the question, is any of this sustainable? There's a growing number of experts who are getting a serious case of déjà vu, drawing some spooky parallels to one of the most famous financial meltdowns we've ever seen. Let's talk about that.
This quote from a former OpenAI researcher, Jenny Shao, really nails the bubble argument. She's saying investors are basically living in the past. They're throwing money at these big language models as if it's still 2023. But the folks on the front lines, the actual researchers, are already seeing the limits. The hype on Wall Street is totally out of sync with the reality in the lab.
So let's compare them side by side. On the left, yeah, the similarities are a little scary. You've got valuations that have just shot past earnings, massive spending on infrastructure, and hype that's way ahead of reality. Sound familiar? But look at the right side. There are some huge differences. This time, the spending is coming from incredibly profitable tech giants, not startups burning through cash. And unlike the dot-com era, there are already clear, proven ways to make money, like cloud services. And this all points to a concept from the research firm Gartner. They call it the trough of disillusionment. It's that moment, that inevitable point when all the initial excitement dies down and the world starts asking, okay, that's cool, but where's the money? It's the point where the revolution has to start paying its bills. So you have these 2 really powerful stories, right? One is about a tech revolution that's changing the world. The other is about a classic speculative bubble. So which is it? Well, like with most big economic shifts, the answer isn't a simple yes or no. And here is the key takeaway. The most important point. It's both. The technology is absolutely revolutionary. There's no doubt AI is going to create enormous value and change our world. But at the very same time, the stock prices for many of these companies are just way ahead of their actual profits. The dot-com crash taught us a huge lesson. Revolutionary tech and an overvalued market can absolutely exist at the same time. One doesn't cancel out the other. Okay, so if it's both a revolution and a bubble, what does that actually mean for you? How are you supposed to think about all this? Let's switch gears from just analyzing this to building a practical playbook for what you really need to be watching. Here are 5 key signals that are going to tell you whether this boom is for real. Number 1, revenue growth. Is all this spending actually turning into profit? At some point, it has to. 2, energy. Can we solve the power problem? If not, the whole thing grinds to a halt. It's a hard physical limit. 3, model performance. Are we still getting huge leaps in what AI can do, or are we hitting a wall? 4, enterprise adoption. Are big businesses really using this stuff, or are they just playing around with pilot programs? And finally, number 5, competition. For this market to be healthy, someone, anyone, has to challenge Nvidia's stranglehold.
So, for anyone looking at this space, the advice is pretty straightforward. You gotta diversify. Please don't bet the farm on AI. Focus on the companies that have real business models. Those picks and shovels players are generally a safer bet than some speculative app. You need to watch the earnings reports like a hawk, be ready for some wild swings, and most importantly, think long-term.
So where does all this go? Based on everything we're seeing, we can actually map out a pretty likely road ahead for the next few years, from the spending spree we're in now to the inevitable shakeout that's coming.
In the short term, so through 2026, expect the spending to just keep going. These big companies have made huge commitments. But then, around 2027, we're probably going to hit that trough of disillusionment. A market correction is coming, and it's going to weed out the weaker players. And then, long-term, 2030 and beyond, AI will be just as big as the internet, but, and this is a big but, just like with the internet, a handful of giants will end up capturing almost all the value.
And that brings us to the final thought. At the end of the day, the debate isn't really about if you should invest in AI. The technology is here, it's real, it's not going anywhere. The real multi-trillion-dollar question is this: which of all the companies in this crazy gold rush today will actually be left standing in 5 years?